Vincenzo's Go Crypto Investing this May the 2nd, 2025, early afternoon cryptocurrency and the blockchain technology and the gold and silver bullion update. And you can see the Bitcoin price is still pushing up. The Bitcoin price is still moving up to the upside after it's bounced off that critical technical level that we talked about for several months, hitting that $74,000 level. And it's been having a phenomenal pump to the upside. And if we go into the daily time frame, you can see we are having a bullish cross now. You see that? We are about a day, maybe probably by, unless there's a big crash like we talked about yesterday, there's going to be a bullish cross, which is very critical. The price continues to pump up in the daily as the volume continues to decline. I still think this will roll over on itself and end up back down and retest this critical $90,000 level. And potentially, before you know it, that critical 74,000 level below it. But right now and currently, the price is still pumping. So that's what we're going to watch this weekend. But it is in now a critical area of resistance and support. If you look back here, look at all that resistance and support along that line at 97,133. So we'll see what happens this weekend. This is a very critical stage. We're going to have a bullish cross if the price holds up over the weekend. Uh, so it's very, very critical. This is very, very exciting, and there's a lot of things going on. If we get into the XLM price, that price continues to consolidate uh, at the 100-day moving average at 28 cents. We're sitting on the 50-day moving average right now. You can see the moving averages are running parallel because the price has had a lot of ups and downs here in the last 2 weeks, but more or less, it's been ending up in this range every time, right about there. So the moving averages have leveled off because it's been about a month and a half. So your major support level is your local support level is the 50-day moving average, and the daily is sitting there at about 27 cents. Your major underneath support is that 25.5 cents that you're trying to fight, hold, scratch, and claw and keep it as major support and not flip it to major resistance. So that's what we're going to be watching out for this weekend. Do we get a pump now, either at the 50-day moving average and stay bullish off that? And then this weekend we pump to the upside and take out this regional high up there at the 100-day moving average? Or do we trade in between the moving averages, the 50 and the 100 this weekend, before early next week coming down and retesting that 27 cent, 25.5 cents? That's what we're going to be watching there. The same thing for XRP. You can see we're holding and scratching and crawling to hold this neckline at 209 in purple horizontal. You can see the left shoulder had multiple hits as a major support area for the neckline. The head had a wick, and then the right shoulder has been all over it for 2.5 months. And this weekend is going to be, can we hold this critical neckline? You can see we have the 50-day moving average running parallel with the 100-day moving average just above it at 21 cents. The 50s at $2.22. The 200 days sitting down there comfortably below them at $1.98. And that's what I think is going to go on this weekend. Can you hold the short-term moving averages and the medium-term moving average that are grouped right on top of each other? Or are you going to fall down to this 209 major neckline support? And that's going to be what we're watching out for. Can you hold this 50 where you're at now and continue to the upside and potentially try to end this weekend all the way up here at $2.55 if you can hold the 100-day and the 50-day moving average? Or are you going to get stuck where you're at and end up trading sideways this weekend, and then before you know it, on Monday or Tuesday, you're sitting down here at the critical neckline? So that's what we're looking like there with the XRP. The AMP, it's consolidating now, so this is a critical spot for AMP. As we know, ever since early December, we've been on about an 83 to 86% falling channel to the downside. Then, oh, come on, get the purple. Then for the last several weeks, ever since about mid to late March, you can see we traded sideways out of the channel, then traded down, but holding it on the top side of it. And then we had our first big pump here in the last 10 days, uh, as the rest of the crypto sphere has been coming off some of their sell-off lows, especially the altcoins that have had some of the bigger returns because they had the bigger falls, right? Some of them fell 60 to 80% from their November, December, January highs, which is very significant. You can see we're sitting now, we got wick down off of the 100-day moving average there beautifully like you should. And now you're sitting there with a consolidating price and a consolidating volume, which usually is indicative as the price is going to break to the upside. And if it breaks to the upside, the next pump to the upside should look something like this. Get out of there. We still do not want to buy you. Should look something like this. Right up into that area, right? That'd be a nice 36.72% pump. Get you right about where the 200-day moving average is, or just north of it, and just on or north or along that critical 0.00540 level. And that's what I'm watching this week on. Is this coiling up for the next pump to the upside here, an amp, and potentially a pump rally up to 0.00860, which would fulfill a technical move out of this falling channel? That's what we're going to be watching for this weekend. But we're on the 50. We need to continue to hold that. Then we need to march and steadily push our way through the 100-day and 200-day moving averages that are overhead resistance. And then another major resistance level, the horizontal green at 0.00540, right? So we're looking and paying attention for that. The XDC is the same thing. You can see we're still trading up and sideways in XDC, as we are in a lot of these coins after they've come off their low. You can see the 50 is just below the 100. The 200 is comfortably below both of them. And this is another case this weekend. Are we going to be able to break to the upside out of this consolidation with a forceful, localized volume spike? Or are we going to continue to trade in this jagged sideways pattern and just try to fight and hold the 200-day and the 100-day moving average this weekend, right? So that's what we're watching out for in the XDC. The Algo, same thing. You can see we did come and run all the way up into this 23 cents, something that we told you about, the 200-day moving average and the bottom part of this light red resistance box, something that we were telegraphing when you broke down out of here, that we were coming down to the 19 cents. And then eventually we could see a spot where you come all the way down to the 10 cents. We bounced off this 20-cent level. We've been as low on the wick as 14.5 cents, and you got rejected off a major resistance area. So this weekend, what you would look for is to continue to hold the 50 and try to repeatedly chip away at this 22, 24 cents and breach into this red resistance box, right? If not, you're going to end up back at the 19.5 cents. Like, subscribe to the channel. This station is built to help you, the retail trader. It's built to keep you informed when nobody else is looking out for you. And it's very vital and time sensitive to help support the channel, continue to move the movement, building of truth, trust, education, and information. It starts with you by subscribing to the channel. It starts with you by spreading the word. And it's valuable and important that you need to be informed as a retail trader in these manipulated, choppy waters. Peace and love. 72-degree, yeah, correction, 64 degrees, Jay, from the great state of Michigan. Peace and love. The Rock's eyebrow.